Instead of approaching the markets and looking for a trade, I want you to imagine the markets was telling you a story, right? Every story that we've all read has a beginning, has a few main characters, and it has a moral of that story, right? We've all read a book before. I want you to take that mindset and apply it to the markets when you're looking for a trade, right? Every single trade you take must have a clear beginning. It must have a few main characters which are telling you what's going on, and you need to understand the story. So in other words, you need to understand who is in control of the market. So my job as a trader, I never look for a trade. I'm simply reading what the market is telling me to do, right? I'm treating the markets as if it was a story, and I'm just reading what the market's telling me. So the way that I do that is by setting the scene. I want to know where the market begins trading from, right? I then want to look at a few main characters, and then the most important thing is I want to understand the moral of the story. The moral of the story in trading, there's only two things that can happen. We can either go long or we can either go short. So with that in mind, it simplifies the entire process. So if you have any psychological problems, or you have any entry problems, or you don't understand why some market structure shifts work, some don't work, hopefully in this video, I can clear that up for you. So there's three questions you want to ask yourself whenever you enter a trade. You want to know, where does a trade setup actually begin, right? That is setting the scene of your story, right? The next thing is, what are the main things that actually move price? Because there's very few things in the market you actually need to focus on. It's not indicators, it's not patterns, it's not ICT, it's not SMC, it's not CISD, it's not EMAs, it's none of these things. It's only a couple of things, right? And the last thing is, why did the market move up and why did the market move down? Right? It's that simple. So I'm going to be breaking down the first step of the story, right? Which is basically, every story starts and has a beginning, right? So in the markets, that translates to a key level. So when you set the scene, you want to focus on, where is the market showing you intent to take a short or a long? Where are the key levels in the market? This is the most important thing. And if you mess this up, it becomes very difficult to catch any kind of winning trade. Now, that being said, let's take this to the charts, right? So last week, on the 13th of January, probably the best short of the entire year. So we've been pretty much bearish on the S&P 500 or ES futures. And so I'm going to be breaking this down in terms of how I find my key levels, because this is the most asked question I get. And this is the first part of the story. How do I set my scene? So if I just show you a 15-minute chart of ES futures, right? This is before the market even opened. And so what am I looking for when the market opens, right? So this is Wednesday, the 13th of January. Now, there's a few things right off the bat that I'm looking for. But before I do that, my basic way of finding a key level looks something like this. We want to see the market moving higher and giving us a sweep of previous day liquidity. That's what we get over here. And then we have a break to the downside. So this is where the short became real. This was the key level that we're looking for. So I have very strict criteria when it comes to finding key levels, right? This is where the story actually begins. Now, if you just take a look here on the 15-minute time frame, this is 8:30 Eastern. We had a news event over here. This news event extremely important for the key level, because we have a fair value gap, right? This is the market leaving its fair value gap. So this red line over here, and then this red line over here. So between these two red lines, we have a fair value gap, an imbalance on the 15-minute time frame, okay? Now, what I like to do with my key levels is I like to take the candle before the fair value gap, right? So I will take the candle before the fair value gap, and this is my key level, right? Now, again, what makes a key level for me, just without using order flow, right? Let me just change that to gray. Without using order flow, right? What I look for specifically is a sweep of a previous day high or low. This is the most powerful combination. Sweep of the previous day high and a fair value gap. That's just from naked price action. No order flow, just naked price action, right? Now, once you have that in place, what you're now waiting for essentially is you're waiting for the market to come into this zone, right? Into this region. Now, the reason this is so important, now, the way that I want you to think about this is that the story of the market, right, or your trade setup only is valid here, right? Because this is the key level. Nowhere else should you be trading, right? So this is the only key level we had up until that point here, right here. Now, you are simply waiting for the market to hit this zone. Now, when we hit this zone, do we either go long or do we go short, right? Those are the only two things that can happen at this key level. Those are the only two things. So when you're coming into market open, so this is me now at 9 o'clock Eastern, half an hour before market open, right? So I'm waiting for the market to open, and I'm just patiently waiting for 9:30 Eastern. I don't take any trades before 9:30, and I don't take any trades after 11 a.m. I am so strict when it comes to my key levels because I understand a good story in the markets has three parts, right? The market wants to hit a key level, you want to look at things inside the key level, and then you want to understand what happened in that key level to kind of give you the moral of the story. That is the only thing you need to know in 2026, right? So all we're doing now is we're waiting. So notice how markets opened, of course, 9:30 Eastern. We tap in at 9:48, 9:49. So that's almost a 20-minute wait. Now, this is the beauty of key levels. So if you're struggling with psychology, it's probably because you don't have your key levels down. So this is a key level in the market because it left a 15-minute fair value gap and it swept a previous day high. Right, that is one way that I find my key levels. I have a few ways of finding my key levels. This is one of them, right? So once you have your key levels, the next thing is to understand who was in control inside that level. So knowing who's in control inside your key level gives you the moral of the story. So once you have your key level set in stone, you then want to know whether to go long or short, right? Because when you come into a zone, you can either go long or short. Now, where I think a lot of traders go wrong and they start to blame psychology is they don't know what to look for inside of a key level. Now, your key level could be a fair value gap, an order block, a breaker block. It could be almost anything. Almost anything. You need to fundamentally understand who is in control at your zone, right? Who is actually, buying or selling at that zone. And so the way we're going to do that, the way I'm going to break this down is by going to the ATAS platform. Right, I'm going to be breaking this down on the footprint chart. So this is the ATAS platform. This is the order flow platform that I use. And so you can read all the buyers and sellers from here. Now, fundamentally, how does a footprint chart actually work, right? What makes a footprint chart? Now, this is a footprint chart over here. Now, footprint charts, they look similar, though they look very different to candlesticks for an obvious, reason. But when we go to a footprint chart, it reveals information about a candle, which a regular candlestick chart will not, right? So I want to quickly break down this bearish candle over here, right? We're going to break down a bearish candle and then a bullish candle. Now, when you look at this candle over here, it has a huge wick. So again, this is the candlestick, right? This is the candlestick and this is the footprint charts, right? So let's get the footprint charts up. Now, I've made a lot of videos about footprint charts, but I just want traders to understand, for the sake of this video, we're talking about the story of the market, right? Now, the story of the market has a few main characters. In fact, the main characters, there's three main characters I want you to focus on inside of the candle. Now, the first is the left number. That is the bid. So those represent aggressive sell orders, right? Now, the right number is the opposite. That's the ask. They represent aggressive buyers, right? Aggressive sellers, aggressive buyers. That's all you need to know in terms of the main characters, right? Aggressive sellers, aggressive buyers. So when we come into a key level like this, for example, when you come into a key zone, it could be anything you want. So I've heard traders, over the years, traders say lots of different things, right? We have support, some people call this support. Some people call this resistance. Some people call this supply. Some people call this demand, right? There's lots of different names for it. Some people call it trend lines. You can apply it to almost anything. But the question is, when you come into a zone, the only thing that you need to actually read price is buyers and sellers, right? There's nothing else. There's absolutely nothing else that you need. And so when you're looking at a footprint chart, the footprint chart gives you all the information. It's not an indicator, it's a tool. And it's a tool to give you pinpoint precision trades or pinpoint accuracy when you're taking lower time frame scalps, right? That is the whole purpose of using footprint charts. And so footprint charts, again, the left number is the aggressive sellers, the right number is the aggressive buyers. Now, why are these tools so essential and why are they so powerful? And so I'm just going to break down Tuesday short just so traders can appreciate this, right? So if you just take a look at Tuesday's short, for example. So I took a short on Tuesday. I mean, I made a trade about this. I made a recap about this. Now, in order for me to go short, right? What gave me the confirmation, right? What gives confirmation inside of a key level? Now, the only thing you're interested in is buyers and sellers, buy orders and sell orders, right? And that's what I'm going to be breaking down from last week, right? So if I go to Tuesday's short position, right, I'm just going to bring that up. So Tuesday's short was, here we go. There we go. Yeah, so Tuesday's short was here, right? So this was the short from Tuesday. And what I want traders to now focus on is your key levels, right? So key levels are what differentiates traders, right? So you need to know how to find key levels, but you need to understand the main characters inside the key levels. And so you're not looking to read every candle, every number, every minute. That's impossible. You just want to focus on the areas of order flow around your key levels, right? These are the main characters around your key levels. And so if you take a look at this over here, this is a red candle, but look what was happening at the upper end of the red candle, right? Here is aggressive buyers, but we broke below the zone or almost below the zone, right? Same thing over here. We had aggressive buy orders, but the market broke almost below the zone. Even here, we had these aggressive buy orders, market eventually broke below the zone. Now, what's interesting over here, now my execution for that day was over here, where the two arrows are. Now, what's interesting here is even though we broke below the zone, we had more aggressive buyers over here. Now, when we take a look at this on the candlestick chart, the candlestick chart doesn't give us much information as to who's aggressive, right? Who is aggressive, right? What I mean by aggressive is, are there more buy orders or sell orders, right? More market buy orders or market sell orders? Because when you understand how the market works, there are two types of players, right? There are two types of characters, right? There's two types of main characters. Yes, we have buyers and yes, we have sellers, right? We all know that buyers and sellers, or buy orders and sell orders, are responsible for moving price, or at least responsible for our decisions when we take a long or a short, because we need to read those orders. Now, when you dive in a level deeper, what you understand is that there's actually two types of buy orders and there's two types of sell orders, right? There's market orders, right? We have market orders and we have limit orders, right? Limit orders. Let me just write that as well. Limit orders. Now, when we have market orders and limit orders, right? What's happening over here, just for basic knowledge, is the market orders are showing up on the footprint chart. So these are the numbers you can see, right? These are the numbers you can see on the footprint charts, right? And the delta corresponds to, again, the numbers you can see. So when we have a blue delta, that means that that there's a lot more aggressive buy orders than sell orders. That's exactly what's going on here. Now, what you don't see in the footprint charts, which is the most important character in the entire market, is you need to understand that there's actually limit orders, sell limit orders resting in this zone, right? And they are responsible for the lower prices, right? And so just going back to my slide over here, my slideshow over here, every single trade is a story. It's no longer you going out there and looking for a trade, right? In 2026, I want you to ditch that mentality of I'm going to find a trade. No, I'm going to read the market story and then do what it tells me to do, or do what the story is actually saying, right? Bet on the story, not on your own trade plan, right? So every trade has a beginning, has a key level. Now, every trade has main characters, right? You have buyers and you have sellers, and you have market orders and you have limit orders. Now, the next thing is you need to truly understand the moral of the story. How do you begin to read the market, who's in control, and whether you should be buying or selling? And so the final part of that story, once you have your key level, once you've read the main characters, you want to interpret what those characters are doing. So in other words, the story is only understood when you truly understand who's in control between buyers and sellers. And so I've made a lot of videos on this, and I'll keep making a lot of videos on this, because this is the most important part of the markets, right? The most important part of the story is the moral. Do you understand what happened in that story? Can you therefore execute a trade based on that story, right? That is the narrative I want you to buy into. So form a key level or find a key level, understand the buyers and sellers, and then trade what the buyers and sellers are telling you to do.
I'm going to
Right? It
break down a
sounds simple, and
few
it is
examples on
simple.
the chart, right? So I trade ES, I trade ES futures, S&P 500 futures. It's my favorite market, right? And so I'm just going to be breaking this down. So without going into too much detail on how I find my key levels, these are my ES levels, right? I have my ES levels in stone, right? So for those who want to just copy them, even though I don't recommend that, you should understand why. I've got my key levels here, right? So I've got one key level at around 70.05. I've got one at 69.90, and then I've got one at 69.60. So these are my key levels. Prior to this huge gap down, these are the three key levels I'm looking at. And so what I'm going to do is I'm going to break down the reactions at key levels. So I'm going to be breaking down a few harsh movements, right? I was talking to a trader recently, and he was saying that there's big moves up and there's high momentum and there's fast candles. That doesn't make any sense, right? Unless you have a stopwatch and you're measuring those candles, or you have a momentum tracker somehow, right? None of that makes sense. You need to find your key levels, understand who's trading at those key levels, and see where the absorption is, right? Absorption is a fancy word of saying, see, when you see the market going down aggressively or going up aggressively, these are absorption areas. Now, absorption is the moral of the story, right? Absorption is, buyers are in control or sellers are in control, right? So what that means is here, there was an absorption of sellers, so buyers were in control. We saw higher prices. Now, over here, sellers were in control, so buyers were absorbed, sellers were in control. Now, another way of saying this is the proper way of using it is this is demand and this is supply, right? That is how you want to be interpreting the market, right? In terms of supply and demand. So let's break this down in terms of order flow and absorption, because this is one of the most asked questions I get as well. So let's really break this down. So if these are my key levels, right? So these are my key levels. Again, this is the ATAS platform, right? This is the ATAS platform. So on the ATAS platform, I am only interested in a few levels. So let's go to the 5-minute chart. Now, on the 5-minute chart, let's first break down this absorption area. So this is now 70.05. So at 70.05, what was going on, right? What was going on at 70.05? So we had this huge melt off all the way down to the next level. What was going on inside of this area, right? So this area is absorption, right? This is what we call absorption. And I'm going to break down exactly what that means. Now, from a candlestick chart, it's difficult to appreciate this, right? But well done for those who got short over here. It's difficult to appreciate what was going on here. So this entire move to the downside, originating from here, and we short down to about here. Now, what was going on over here? This is very important. 70.04, 70.05. What was going on? And so this is where we get both of the charts up together. Now, absorption is a fancy word of saying trapped or exhausted, right? Absorption simply refers to who is not being rewarded, right? Who is failing? Who is in the most pain? Who is sucking, right? Who is not being rewarded? That is what's happening. That is what absorption means, right? Now, there's no such thing as this type of absorption, that type of absorption. It's very, very simple. And I'm going to break it down. Candle by candle. There's only a few candles. I'm going to break it down. So what we can see here is a classic break and retest, right? So what we can see here is we see the market breaking below the zone, right? So we see two breaks over here, and then we see a retest. We see a retest before we eventually head lower, right? So this would be a hypothetical short with stops just above the zone, and we want to target the next zone down here. The question is, why did this short actually play out? That's what I'm trying to get at. That is the moral of the story. Now, we've been through all three parts, right? So assuming you understand, you know where your key levels actually are, you understand the main characters, because I've been through the main characters, buyers and sellers. Now the last thing is the moral of the story. So in other words, who is really in control? The moral of the story, who is in control, right? And this comes down to control. Who is in control of the market? What was the story trying to tell you? Did you understand that story? Okay, so this now is where we're going to be focusing on. So if we just take a look at this candle that I've highlighted, or that region, that entire region in blue, right? Let's now take a deeper look in terms of order flow. Now, in terms of order flow, this is what we see, right? So again, left numbers aggressive buyers, left numbers aggressive sellers, right numbers aggressive buyers. Lots of blue delta, which means there's lots of buyers, lots of buy orders. Now, these buy orders weren't really successful. This is what absorption actually means, right? So what's going on in very simple terms is you see lots of blue delta. Blue corresponds to buying effort. Buying effort is occurring. So price, the market's trying to drive higher. The aggressive buyers are trying to move price higher. But what we have over here is multiple breaks to the downside. Break, 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 and then we, initially break over here below the break line. This is why shorts play out, right? This is why the market actually goes bearish in the first place, right? The market goes bearish when there's an absorption of buyers, right? These buy orders over here, right? These buy orders, these ones here. Now, on the flip side, right? On the flip side, if you were to break this down for a bullish example, it would look something like this. So I had my levels down here, 69.40 to about 69.30. These were my levels. So the next question is, what was going on here? This is what's even more interesting, right? So let's break this down on the 5-minute chart. Let's break this down. So on a 5-minute chart, we want to see, this wick rejection, same as this wick rejection over here. Again, what was going on inside the wick, right? Again, very indicative straight away. Now, this wick corresponds to this wick, right? But we're seeing a bullish rejection. So this is the opposite. Now, when we see these higher prices, what's going on is we see a lot of aggressive sellers plus no reward, right? Because think about it this way. If you see a lot of sell orders, right? If you see a ton of sell orders, but they're unable to break below the zone, or they can only wick below the zone, that just means that buyers are really in control, right? In this region, the moral of the story is that aggressive sellers are present, aggressive sellers are failing. That means that buyers are in control. Buy orders, right? They're buy limit orders resting over here, right? And that's exactly how order flow works. So order flow isn't complicated. You just need to understand where to trade from, what to look for, and why you're looking for it. So it's a story, right? It's moving away from looking for a trade and reading what the market's telling you to do, right? And that's exactly what that was sort of the main sort of message of, I guess, today's video, right? So you want to set the scene, right? Every story sets the scene, sorry, has a few main characters, one or two, maybe three main characters, and then those main characters, you have to read them, understand them, and they will then tell you the moral of the story. And this translates to having a key level, looking at buyers and sellers, and then the absorption to go long or go short.